Money. Money.
I recently had someone call in and ask about zero down loans and if they exist, and yes, they do. There are a lot of different grant programs out there available, some specific for first-time home buyers, some are not. I'm just going to talk about one because this is the most popular one that I utilize because it has the best guidelines available, best interest rates, and easiest options to be able to close, which is a key thing in this market right now, not on the zero down, but on another topic in financing. The financing that you choose to go into with can make or break your offer getting accepted. And it is a challenging offer right now because of the lack of inventory. With all the multiple offers, you might be making an offer on a home that 10 other people are making an offer on a home at the same time. If you're using a down payment assistant program or a grant program, your pre-approval letter does state that. It says that you're zero down utilizing grant funds, which can make your offer less appealing to the seller and the agent that's representing that seller and advising them what offer to accept. So it does make it more challenging. But I do want to tell you, if this is the program that you need to get into a home, it's a great program to utilize, and you'll find a home and get an offer accepted as long as you don't give up. It's just not going to be as competitive as some of the other offer programs would be. Now, you'd be utilizing most likely the Washington State Housing Finance Commission. And the Washington State Housing Finance Commission offers down payment assistance and tax credit to homeowners in Washington State. Now, the Home Advantage program is the one that I want to break down for you today for Money Chat. Down payment assistance up to 4%, so you can utilize a lower percentage down payment assistance, which is going to give you a little better interest rate. But I want to talk to those of you that don't have any money to come in with for a home for the down payment, and the 4% would cover the down payment that you would attach it to, which would be a 3.5% down payment FHA loan. So with the 4%, it would cover that. Plus, you're going to have a little bit extra that you can use towards closing costs and prepaids. Now, if you don't have the funds for closing costs and prepaids, which are typically going to run around 3% of the purchase price, you're going to need to come in with your own funds or some gift funds, or you'll have to try to negotiate that with the seller by possibly increasing the price that you're offering them to get them to agree to do that. Now, this down payment assistant grant program, it does have to be paid back. So it's paid at the time that you sell your home, or if you refinance your property at the time that you're refinancing to get into a better loan, you're going to have to pay that second off at that time. Or at the end of the 30 years, that second mortgage is going to be due in full. Now, the benefits to this program in comparison to some of the other grant programs, you do not have to be a first-time home buyer. So you do have to be owner occupying the property, but you can own other property and, again, not required to be a first time. The potential recapture tax that you're going to see on some of the down payment assistant programs, a recapture tax, what that is to build up the funds available for these bonds that are going to be assisting in new first-time home buyers. So the reason behind the programs are to help people that would otherwise not be able to get into a home if these grant programs were not available. So if you benefit too much from the program when you sell, things are looked at the time you sell the property based on making equity on the home, how much income you make at that time. Some of these programs have a recapture tax where you're going to pay a tax back at the time that you sell your home. This one does not, the Home Advantage program, and that's why I think it's a great option, especially if you think that you're at risk of paying that recapture tax. And that's something that you can go over with your mortgage consultant to see what you anticipate your financial situation is going to look at the time that you think you might be selling the home. Maximum income restriction, this is for all counties. Some of the down payment assistant programs have different income limits depending on what county you're purchasing in, different income limits depending on how many are in your household. The Home Advantage program that I'm bringing to you today does not. It's just one straight income, $97,000 a year. Now, that is based on your gross income. Also, with this program, you can get a little creative with that. If you have a spouse or someone else that's going to be on the loan that's going to put you over that maximum income restriction, you can actually leave them off the loan, and their income would not be included in the maximum income restriction. Unlike on some other grant programs, if it's based on a needs assessment, then the income calculation is a lot different and stricter that way. But if it's not a need assessment, which this one is not, it's only who's going to be on the loan. What you have to make sure, though, is that other spouse's income does not need to be used for qualifying. Because if you don't put them on the loan, their income's not going to be used to qualify for the loan. It's a 0% interest rate. So there's no mortgage payment that you're going to be making on that. Again, it's just going to be paid off, whatever that dollar amount is, dollar for dollar at the time that you sell, refinance, or at the end of 30 years. Now, the Home Advantage program can be used in combination with other down payment assistance options. It can be used for conventional financing, FHA financing, USDA. So there's a lot of options that you can attach that with your first mortgage. Now, on the first mortgage, you are going to pay a premium rate for utilizing the down payment assistance or grant program. Usually you might see maybe a 0.5% higher interest rate, just depending on the fee associated that you choose to go with that program. Now, a lot of the other grant programs require you to have a 5-hour in-person certification course. The Home Advantage program that I'm bringing you to today does not. You do have to take an online course, and it probably most likely with all the modules will take you about 5 hours. So you want to make sure that you block out a lot of time. Whoever's going to be on the loan has to individually, if you're buying with a spouse, they're going to have to take that course as well. A mortgage consultant has to be certified. So if you're talking with a mortgage consultant, and the lender has to participate in it as well. A lot of your credit unions are not going to participate in any of the grant programs. A lot of them don't even participate in any of the government programs, VA, FHA, USDA. So if your mortgage consultant says that the program's not available, pick up the phone and talk with someone else, because it's likely the company doesn't support it, or that individual mortgage consultant is not certified, because there's a certification that every mortgage consultant has to go through in order to be able to offer the program. Really strict on debt to income ratio. It's 45%. Right now, based on where the interest rates are at per 10,000 calculation, in the payment. So if you know what you want to make in a mortgage payment, where your maximum is, it's kind of nice to be able to calculate that based on a per 10,000 calculation. It's about $70 for every 10,000. That's going to include principal, interest, taxes, and insurance. So $70 for every 10,000 in price is going to be what the payment is. And then there's a minimum credit score requirement, which is 620. So that's my money chat for you on down payment assistant grant programs. Coming up next in the Money Hour, are you worried about market strategies and volatility? Tony Sablon with Ultimate Wealth Strategies, New York, right here on 1150 AM KKNW after this short break.